Welcome back. Let's focus on Arvind Limited now. Their Q1 performance saw a hit because of the workers' strike that took place. The strike affected their main business, including the woven denim segment. Management says that domestic demand is likely to improve tangibly in Q2 given festive season and wedding buying. We have Punit Lalbhai, the Vice Chairman of Arvind, who joins us now to talk about that. Punit, thanks a lot for joining in. You know, before we talk about your overall business, I wanted one word on this workers' unrest. What kind of impact has it had on your business? I'm sure it's caused a lot of inconvenience, but if you can share some numbers with us on the kind of damage it would have done.
Sure. So I think it would have taken away about 200 crores of revenue and about 60 crores odd of EBITDA.
Okay, so the impact is 200 crores on revenues and 60 crores on EBITDA, right? So, I mean, what kind of clarity can you give us in terms of what revenue growth could look like going forward? What are the trends like currently in terms of demand and, any kind of targets that you're looking at?
So demand for our business is quite robust. Our export garment orders are looking quite full, the order books. And the domestic demand, as you mentioned earlier, is also picking up. And we have excellent demand on fabric exports as well. Advanced materials continues to do well. So we are still feeling as if, we'll see robust growth in the next 3 quarters, and we should be back on plan by the end of the year.
Punit, hi, morning. So strong double-digit growth for 25?
Well, it will be double-digit. Early double digits is what I know.
Okay. And what about margins, Punit? Because I think there was a freight impact as well in this quarter, and that perhaps will continue to show up in the coming quarters as well?
So there will be some pluses and minuses, but on the whole, we work very hard on locking our margin for the last couple of years. And I think we should now start stabilizing at this level before we start with.
Okay, all right. Hi, Punit. Good morning and good to see you in. This is Nigel on this side. Margins in the past quarter were around 8.2%. But since you'll have operating leverage that will play out, should we work with the number of closer to around 10% for the year?
Yes, so we've been around that 10% for the whole of last year.
Okay.
Study them. Because this quarter, of course, is very difficult to study the margins and conclude anything because of the disruption that we saw due to the strike. But in that 10% to 11% area is where we are hoping to land the margins.
Okay, all right. The positive, I think, in the past quarter was garments. You had done, I think, close to around 10 million pieces. And I think you were guiding for a number of more than 35 to 40 million. What is the volume targets you're looking at in garments as well as denim and woven?
So we are keeping all our volume targets on garments exactly the same. And both on wovens and denims, we will be operating at close to 100% capacity in the next 3 quarters.
Okay, all right. You guided for revenue growth in double digits, Punit. Low double digits. What's the breakup? I mean, AMD will grow how much and your textiles will grow by how much?
AMD will grow closer to 20%, hopefully cross 20%. And textiles will be approaching double digits, so 9 to 10%. So the overall margin will sort of spill into the low double digits.
Okay, all right. Also, you have laid out a Capex plan. I think it is around 450 crores. What is the asset turn that we'll see on this? And the Capex plan, any change there from that 450 crores?
So if you look at the Capex plan, there are 3 components to it. About 40% will go towards the advanced materials division. About 35% should go towards garmenting. Both of these businesses have very good asset turns. So they would average between 3 and 4 times Capex. And the rest of the 1/3 of the investment will go towards core textiles, where we'll be doing innovation investments, debottlenecking capacity, and of course, doing a lot of maintenance Capex.
So on a whole, this 450 crores could result in revenues of around 13 to 1500 crores?
That's fairly accurate. Of course, it will take a couple of years to achieve 100% utilization of this capex. So it will come in a staggered way, and I think in year 3 we should see that full turnover manifesting itself. So it will be this sort of a rolling thing. Next year there will be another capex plan. So yes, on an average you can say 3 times the investment.
Punit, just one last question from my side. On the AMD side, where you said you're expecting 20% growth, that's advanced materials. Which are the segments which are seeing the fastest growth? And I think you're calling for 2,000 crores in revenues in the next 2 years. Is that correct?
Yes, that is correct. We should cross 2,000 crores year after next quite comfortably at the current run rate. The division is broken up into 3 major components. There is a human protection business, there is an industrial fabrics business, and then there is the composites business. And all 3 are growing at around that 20%.
Okay. All right, Punit, we'll leave it at that. Thanks a lot for joining in. That is the Vice Chairman of Arvind.